Hello everybody. So in today's video, I wanted to update you about StoneCo's outstanding Q3 earnings results. They posted those Friday night and the stock is up 12% today. I believe it's not up that much at all compared to where the stock should be trading. The stock is still just as undervalued as it was yesterday, given that it is grown even more than it was a quarter ago. So let's go through the report. Let's talk about the revenue growth. Revenue growth is the most important metric for my style of investing over the long run. In my view, revenue growth, and with my data, revenue growth over the long term is what explains most of the performance of a stock. As far as revenue growth goes for StoneCo, it may seem like they have not had much revenue growth this quarter. That's because they had a little bit of a slowdown in the software business, which stayed flat. However, revenue growth is actually pretty healthy because revenue growth is still 25% year over year if you compare to Q3 of 2022. If you go back nearly 2 years, about exactly 2 years out, two years out, you can see the growth has been pretty consistent. It's not the first time, but they have flattish growth quarter over quarter, but they have a lot of quarters where they surprise to the upside. For example, last quarter, Q2 2023, they had a major surprise, more than 10% quarter over quarter to the upside. Today, still high growth to the upside. Worth mentioning that revenue is growing at 29% year over year for the payment terminals, which is what interests me the most in this stock. The software business is nice to have, but that's not the main business, right? There are 400 million reais compared to 2.7 billion reais. The bulk of the business is their payment business. Analysts are still predicting, and there's been a few updates, but they're still predicting 40% forward revenue growth for this stock overall over the next 12 months. So the revenue growth is very healthy. What has accelerated, in my view, is the client base and the client growth. So their client base is still growing at an impressive pace, with today 3.279 million clients that use their payment terminals. And of course, if you have your clients growing at 41, let's call it 42%, eventually that will translate into more revenue growth as they get onboarded with a payment terminal and they get to use their payment terminal. The same is true for their payments, growing at nearly 30%. This is a stock that's growing very fast. So not only is the number of customers growing, total revenue is growing. If you look under the hood, why is it growing so much? Well, there's the transaction volume. The transaction volume is up quite a bit. So not only do you get more customers to use the system, but they transact more with the system. And then, the take rate is about flat compared to Q2 and Q3, but it is slightly up. But compared to a year ago, the take rate, which is the percentage, the fee that you get each time someone swipes a card in their payment terminal, that fee is very healthy at a 2.5%. It makes StoneCo have a healthy fee, but StoneCo is also a fairly affordable payment method, I would argue, in their market, right? If you look at a company like PayPal or a company like American Express, it can be much more than that. 2.49%, I believe, is a healthy take rate, but not rent-seeking, not outrageous either. This is a company that is in growth mode and growing quickly enough. They are still being prudent, getting back into the credit business. If you remember, the reason why this stock dropped 90% before every single overstock in the market was because they had a problem in their collateral system. They've been working on fixing this for almost 2 years, and they are still going slow, but slowly resuming credit and lending to small businesses. They hope that this will be the next avenue for growth for them. As a reminder, this is they manage the payment solution for 3.2 million small businesses in Brazil, still growing at a rate of 42% customer adds per year. So this is a company that is likely to become a much bigger company 5 years from now in Brazil. They are a leader, small payments, stock, small payments terminal for small businesses in Brazil, right? It's a little different from Mercado Libre, which focuses on online payment and focuses on micro businesses. StoneCo has a little bit of a different focus. It's a little bit of a newer company compared to PagSeguro, which is their closest competitor. I believe they have carved a leading position in that payment terminal side of the business. As far as the software revenue, I mean, it's roughly flat. I mean, growing a little bit at 6%. Eventually, this will grow faster, right? That was the reason behind why they acquired Links, etc. But I don't think this should consume much attention for the CEOs and consume much attention for the shareholders either, because this is a tiny business in the grand scheme of things compared to 90% of the business of payment terminals. So anyways, the margins are excellent at a 20% adjusted EBITDA for that business. These are excellent margins. And speaking of margins, so adjusted EBIT, right, without depreciation and amortization, is what they report here in this quarter, is going up quite a bit at 17.3%. So you can see they have discipline growing that margin and growing that net income all the time, giving the value investors what they really look for, which is the profits. And I'll go through some of these calculations in a second. As far as the cash generation, yeah, they had initiated a buyback, but it hasn't done much to their cash. Their cash still grew at a tremendous pace at 530 million reais. So they have a lot of cash on the balance sheet, and this is what makes me being a little joking, a little facetious, and say this stock is in the cash piling business. They are still in the cash piling business. Time to spend that cash on marketing. That's what I keep saying for this stock. But right now, they're still playing it prudent. And, I suppose I understand, because the market is not giving this stock, in my view, the fair valuation. I mean, it's a dirt cheap company. And let me conclude with this. How dirt cheap? Well, it's still very dirt cheap, despite it being up 12% today, right? Enterprise value over sales ratio is a 1.12. If you look at their trailing 12-month EBITDA margin, so going back the past 4 quarters, aggregated by analysts, calculated at 48% EBITDA margin across the entire business. 48% EBITDA margin. This is a very profitable business. The margin yield, the EBITDA margin yield right now, reusing these numbers from analysts, I get to a 42% EBITDA margin yield. You may remember my video from 2 days ago where I calculated the rule of 80. If you apply the rule of 40 that you have in SaaS investing and SaaS stocks, you apply the same calculation to StoneCo. You get well above 40. You actually get a rule of 100 with StoneCo if you add both of those metrics and take the growth aspect to them. Revenue growth up, predicted to be up 40%. And if you look at the valuation, it's right on par with HIMSS right now as far as that valuation goes. Again, this market is ignoring this stock. I have no idea why this stock is dirt cheap. As a reminder, I would consider a stock on my spreadsheet that is 10 times more expensive. I would still consider it cheap. This means the 0.038, this is the cost per 1 percentage point of revenue growth for StoneCo. To give you an idea, Tesla is at a 0.8, and I consider Tesla cheap. Not dirt cheap, but Tesla cheap. So this is a stock that's maybe 20 times cheaper than Tesla. I mean, granted, it's understandable, right? It's only Brazil. I don't think we're gonna get out of Brazil. This is not a 20-year-old for me. This is more of a 5 to 10-year-old for me. The valuation needs to get back to normal levels, in my view, for this company. I was buying well into the 10s all the way the past few months when it was into the 10s. I'll slow down my buys if it gets into the 12 and 13, because I bet this is a stock that could get forgotten again. And we're going towards Q4. Q4 is usually a great season for spending in the world of payments. Great season for spending. So they may have an outstanding Q4, which raises a stock. But stock that's forgotten, the market needs to rotate into small stocks. All these small stocks are still forgotten by the market. Yes, the top of the market is going back up and getting out of this crisis, this crash, getting out of this crash. But The small stocks, in my view, are still heavily undervalued, and I'm very happy to own StoneCo. I think they have had outstanding results for this Q3. This was not investment advice, just entertainment. Thank you for watching the channel. Appreciate your likes, appreciate your subscribes, and have a wonderful day.